Hey, it's Dan Moralez, America's Mortgage Man, and the Federal Reserve cut interest rates by 0.25% yesterday. And you're probably wondering, what does that mean to those of you who are in the market to either buy a house or refinance a house? What does that mean for mortgage rates, right? Does it translate into a 0.25% decrease in mortgage rates? If so, that's awesome, great news, right? Well, there's a lot of people out there. I ran across this ad yesterday online that seems to indicate that the recent Federal Reserve rate cut translates into a discount in mortgage rates. The unfortunate news is it doesn't translate into a discount in mortgage rates of 0.25%. So what you have to know is when the Fed cuts the Fed funds rate, that is short-term money, meaning that it's typically money that is tied to a short-term type of maturity, generally like an overnight type of rate, if you will. A lot of times that will impact credit cards, home equity loans, those kinds of things. But what it doesn't impact is it doesn't impact long-term money. Long-term money would be like your long-term fixed-rate mortgage, right? So when the Fed cuts that Fed funds rate, it doesn't turn around and translate into a discount in the long-term 30-year fixed-rate mortgage. Now, what can have an impact in that long-term 30-year fixed-rate mortgage is what the Fed has to say about its meeting that it held. What does the Fed think about inflation? What does it think, about, the future of inflation and all of the economic data that it takes into account in determining monetary policy? How do all of those things kind of come into play, and what is the Fed's big picture of where they think the economy is going and what the risk is for inflation and so on? Those things and the things that the Fed says after its meeting can have an impact on where mortgage rates do go. So those things can move rates one way or the other as well. But generally, you're not going to see a huge move in interest rates, short of the Fed doing something that was very unexpected, okay? The market, for the most part, expected that the Fed was going to cut the interest rate by 0.25%. There's a lot of people that think we're going to see another 0.25% either sometime yet this year or going into next year. So if that happens, would that translate into a discount in mortgage rates? Not likely, because there's still a lot of people that are anticipating that these certain things are going to happen. When the market knows those things are likely going to happen and they anticipate those things are going to happen, then oftentimes the market will price for those things that it anticipates to happen prior to them ever happening. Okay? Sounds like a lot of jargon and gibberish, but long story short, to answer the question I've got hit by a ton of clients lately with is, what happens if, the Fed cuts that quarter? Is it something good for me? It really doesn't have any material impact for you. Sorry to be the bearer of bad news, but I wanted to make sure you knew that, okay? Hey, I'm Dan Moralez, America's Mortgage Man. You can find me online at danmoralez.com, DANMORALEZ.com. Phone number 616-931-4629. My NMLS number is 709729. And of course, Northpointe Bank is an equal housing lender. Have a great day.